Good evening, everyone, and welcome to the Q4 webinar for Antler Gold, a project generation company focused on project generation and value creation in Southern Africa. Tonight, you don't have to only look at me. You also get to meet our exploration manager, Oliver Torres. He's leading the technical charge on our projects and acquiring our projects and managing a lot of the technical aspects. So I'm going to be bouncing off him, and hopefully he'll be able to answer some technical questions that do come up. Just before I start, I'm just going to run through the cautionary language. I am going to be making some forward-looking statements and referring to some historical results. All of these are being reported in all the disclosure formats that we have to have them reported. I do encourage you to go back and read these cautionary notes once we are completed this webinar. And if you have any questions regarding technical, please forward them on to Oliver. His email is there. So today's webinar, just the agenda. We're going to focus on the news that we released during the final quarter of 2023, which is the calendar month October through to end of December. We're then also going to bring a bit more color and context to the company's current focus. We're going to give you a brief overview about the current financial situation for Antler, as well as its capital structure. And then we're going to go into a bit of a QA session. So what we are focusing on today is bringing our stakeholders up to date with what the company is doing and why we're quite excited internally and also through our major shareholders about what the company is busy doing. So two announcements during the final quarter of 23. The first one was in October when we announced the beginning of our exploration work on our Ufipa Gold Project in northeast Zambia, and the fact that we are doing it as an educational initiative together with the University of Zambia and the School of Mines there, and a non-profit organization called RES Prime. So just clicking over, that collaboration is a testament to what we are trying to do in Antler. We are doing early stage greenfields exploration, prospecting. It's really exciting. And not only are we looking to de-risk the project technically, but we are also looking to de-risk the project from a social and environmental standpoint. And how we do that is building strong relationships from the beginning that focus on foundations rather than promises of grandeur and everything. At the end of the day, this is early stage. We have to manage expectations, and the only way to manage expectations is by having a collaborative effort. So, I applaud Adi and them for coming up with this initiative together with our partners at RES. And as you can see on the slides there, we took students out from the Zambian School of Mines, and they spent 2 and a bit weeks doing our early stage prospecting in northeast Zambia. We met with all the community and all the chiefdoms and elder structures up there, and we've built a very solid relationship to move forward on. Now we're waiting for results to see how the project can advance and what the next steps are from an exploration perspective. Also in November, we announced a closing of our $500,000 Canadian private placement. I'm really encouraged by the fact that insiders and large shareholders took almost 95% of that financing. It's testament to what the company is doing and the company that we are building. And we're building value creation and not highly diluted financing. So it's a small raise that is going to go a long way with the work that we're busy doing. So yeah, passed it right big across the screen as a comment from myself. But it's about risk management and allowing the company and our shareholders to take as many shots at gold as possible with the lowest amount of dilution. And until we're able to unearth, the Holy Grail, and then we have the opportunity to move forward. So our approach at the moment is to manage that risk intelligently, pursuing numerous opportunities with minimal dilution. And what it allows us to do is drive value through diverse ways, be it through royalty, minority stakes, full-time ownership, but ultimately we're driving value. And how is that different to traditional juniors? So project generators versus traditional juniors, I think what we're trying to do is manage risk as well as manage dilution. So whereas traditional juniors would have one or two flagship projects that they are using highly dilutive financings in to move along the exploration curve, we have multiple projects. And most speculators, and you see this with project generators, most speculators like to manage their own risk by owning a basket of companies listed on the exchange at various stages. And, the reality of exploration is majority of them, if not all, will fail. Personally, as the CEO of the company and our senior leadership, we discussed this internally, and we felt that we would rather spend our time building a company that is designed to create value. And as you can see in the slide here, I think the most important one being, let me get if you can see my mouse here, I'm not sure, but as you can see over here is we've got how traditional juniors do the financing. Find an early stage project, they do an earn-in option that has a certain amount of cash and shares. They do a financing round, and that's dilution. Based off those results, they go again, they get an uptick in their value, and they go do another financing round. And all the way through that, they get diluted. And ultimately, not only is there technical risk at stake, but there's also a lot of dilution risk at stake. And as the company moves up in its valuation, people have to participate to maintain their stake, or they end up getting diluted out. And if ever a discovery is made, which is very rare, yes, they hold 100% of it, but they've got close to 1 billion shares outstanding, completely diluted, and the value has been sucked out of it at an earlier stage. Where with the project generator model, we do an initial financing round, which we have done, and then all our projects are financed through partner funding, be it through exploration funding, cash, royalties, or shares. And what happens is we end up owning multiple projects, maybe smaller amounts, but capital becomes our partner, and we can have multiple shots and goals. And then because we haven't had to do highly diluted financing, we only have a small amount of shares outstanding. And how that translates into Antler Gold's business model, we got creative, and this is a testament to our team and our leadership. We sat down and we spoke about it, and we thought, what's a creative way to offset risk, increase shots at goal, and wait for the right time for us to swing for the fences when we have the right capital in our pockets and the target looks good enough. So what we've done is we realized our strength was in project generation. Ollie and our team down here, as well as our partners, have got a long-standing reputation in creating good, technically viable projects. And we then move those projects into the early stage of exploration, which allows us to do grass fields and prove the concepts that we are testing. At that point, the value that we've created goes automatically into the markets, and we now start looking for a credible partner to come in and finance moving forward. That is our one option. The other option that we have is if the target is really good, we can move it along ourselves with our own money because we've been selling other projects. Or the other option that we have because of our pedigree in the capital markets is to potentially spin it out and put it in another vehicle with its own management team. So our business model doesn't only allow us to move to an option agreement or partner-funded exploration. We also have the ability to move it along ourselves, or we have the ability to do any other transaction that creates value. So what that has allowed us to do is get short-term revenue, mitigate the risk, as well as maintain long-term revenue through a royalty or similar type holding. And what's the benefit to the investor and the money that the investor puts in? It's definitely the fact that we're efficiently advancing projects. We've got diversified exposure to the commodity cycle. We act in a counter-cyclical way. When a commodity is in vogue, we are looking to sell those projects rather than to acquire, because the cost of acquiring at that stage is high. And then use the money that we get out of those projects to go put together projects that are not in vogue. And all these things are in a cycle manner. So we do act in a counter-cyclical manner. We get upside by having proven technical partners. As you've seen, Antler Gold has already signed two quality agreements with two proven partners. And it allows us to manage our own risk. Exploration is a risky game, and we're managing our risk as best as possible to maintain our shareholder, our equity dollars and our highly diluted dollars in our bank account. So to show this project in action, to show this company in action, I always like showing this map. And I'm going to hand over to Oliver because he can talk a lot better here. But what I'd like to highlight from our perspective is if you've been on our webinar updates during the course of last year to now, you'll see this map change continually. And I would argue that Antler probably is doing more true greenfields exploration in Southern Africa than any other listed company at the moment. And the goal is to create value, whether through a royalty, minority interest, equity stake, or be it 100% owned. So on the technical side, I'm going to hand over to Ollie and he can walk us through that.
Hi, everyone. Hope you guys are enjoying the seminar so far. So as Chris mentioned, these are our primary targets within Namibia and Zambia. The Paresis Gold Project, which Chris also mentioned in our first press release. Talene Kruger, our senior geologist, and myself will be heading out into the field next week to do some first pass mapping and sampling and just getting the lay of the land. Some important factors on our Paresis Gold Project. The location is really great for us. It's in a complex geological setting, and there are large regional structures that are moving in this area, which host significant gold mineralization. Examples of this are B2Gold's Otjikoto deposit, as well as Osino Resources Ondundu and Osino Resources' more recent Eureka discovery. Then moving on onto our Erongo Gold Project, also known as our Central Project. We've also recently completed the last bit of soil sampling and calcrete sampling on this. We had some initial gold anomalies and we followed up on this. The lithologies in this area are also very similar to Navaja QKR's deposit and Osino Resources Twin Hills. We have a few drill-ready targets that we've picked up from our soil and gold anomalies, as well as coincident magnetic anomalies from our HeliMag survey that we flew in the beginning of the project. Then on our Onkoshi Gold Project, it's 5.5 kilometer open-ended gold anomaly, which also is supported by some historical drilling and coincident EM and IP targets. We also have two new licenses to the south and the southeast bordering on the Onkoshi Gold Project. So as soon as our environmental clearances are granted on that, we're going to do our first stage of soil sampling on that. Then in the south of Namibia, we have the Ziggy Copper Mooifontein project, also recently granted license to us. Historically, there's been some grab samples that have been up to 13% copper. From the images and historical work, it seems to be hosted in malachite, which we're quite excited about. We're also just waiting for the ECC on this target, which hopefully will be issued soon, and we'll also do our first pass on that. Then moving from Namibia to Zambia, the Ufipa Gold Project is our project that Chris was also talking about, that we did with RES Prime and the University of Zambia School of Mines. We've completed the stream sed and overbank and grab sampling on that. We did about 110 stream sed samples, 110 overbank samples, and about 30 to 50 grab samples. So we're waiting for those results from the lab, and yeah, depending on that, we'll plan our next work project. Then heading to our Kessia rare earth project, which is our very exciting rare earth project. It's a 3.5 kilometer wide carbonatite with proven REE enrichment. We did an original grab sampling campaign on there where we took 55 grab samples, and the results were really encouraging. It's also very close to Lusaka. It's about an hour's drive depending on traffic, next to great infrastructure. So yeah, we're very excited to get some more work going on that. And then furthermore, within Namibia and Zambia, as you can see, all the purple triangles, those are new applications. In Zambia, we have another application for REEs and another one for uranium. And in Namibia, we have a few new copper applications as well as some gold applications. So once those are fully processed, we'll update you on that. But yeah, it's a quick overview.
So I think, and also with the Kessia project, last year we signed a earn and option agreement with a premier partner, Prospect Resources out of Australia, which gave the project a fair valuation. Antler will retain 49% of that project after all work and expenditure commitments and other commitments have been completed. And we look forward to working on that project together with Prospect Resources. So, here's a quick summary of what's happened in recent. I'll start in Namibia on our applications, because I think it's important to demonstrate that the company isn't just sitting on ground to hold ground. All of these targets and all of these projects that we have put together are extremely technically viable. They're early stage concepts, and they're large land positions in highly prospective areas. And then arguably in two countries that are seen as two of the most stable jurisdictions in Africa. So on our application side, we've got 3 gold applications in Namibia, 2 copper applications. We have 1 rare earth application, and we have 1 zinc application. On active projects, we have our Onkoshi project. As Oliver mentioned, we were issued with 2 new licenses to the southeast and south, which gives Onkoshi not just the immediate Erindia and Fearless gold prospects, but expands the targets, as well as secures our land positioning in quite a hot area. Our Paresis project, which is the conceptual project that was put together, we got the license granted. We're waiting for the second license, but work is starting on that license next week, as Oliver pointed out. We continually are working and moving our Erongo Gold Project together, which is located contiguous with Osino Resources Twin Hills project, which recently they sold or have entered into agreement with a mining company, Dundee Precious Metals. So we enjoy, we've got a great relationship with our neighbors, as we have with everyone in Namibia, and we're going to continually move that project along. Then our Ziggy Copper license, that's really exciting. The license was issued to us. We were waiting for the environmental permit to start work there. Copper the doctor of economics is a great commodity to have in our basket, and we think that that's something that will move along nicely. In Zambia, Ollie pointed out we have the uranium application and another rare earth license application. But again, discussing on Kessia, the deal that we've done with Prospect Resources, and on Ufipa, our gold project, the fact that we have moved this almost 600,000 hectare, 500,000 hectare license into some early stage exploration, and in a very cost-effective manner. And the nice thing that I'd also like to point out is that we were able to do this. This is a license an area that has never been tested for gold, and we've built a strong concept up there. We've been able to secure the license and move on to that license all within a year in a cost-effective manner. And we definitely are some of the first movers in Africa doing this. And that's quite a nice way to move into how we build our project and our pipeline. And what we have been very cognizant on is that we don't just have a whole bunch of projects with a whole bunch of potential work commitments and spend commitments, or projects that we're not able to get to because we don't have the capacity, be it through human resources or financially. So how we've done this is we've built a pipeline that allows us to have projects at different stages to, again, mitigate that risk of spending our capital and allow us to move projects forward in a manner that is risk mitigated, but also allows us to work all of them and give them a fair chance to breathe. There's a lot of projects, I'm sure you guys everyone on this call is fully aware of, that unfortunately haven't moved forward due to poor management or being overstretched at the time, etc. So how we do that is we continually, what's not on here, we're continually working on concepts, thinking out the box, creating our own box that allows us to put in applications in a cost-effective manner. Putting in applications as well as staking or pegging in Canadian terms allows us to be potentially the first people to have the mineral rights there for exclusive prospecting. There we highlight the fact that we have a whole swath of commodities and we're in different geographical jurisdictions. And as that moves out of an application and the conceptual project is brought now with the license, say for the Ziggy license, we have now secured the mineral rights for that area. We are now moving forward with the environmental permitting and all the other statutory requirements. But during that time, it gives us confidence to spend money on acquiring the data, as well as getting our geologists to spend time on desktop work and developing targets and an exploration program to move forward. So that when it is permitted and fully ready, it moves from there into an exploration project, such as the Ufipa project and the Paresis project, which we have mentioned. And in essence, what we have done now is not only have we developed a strong exploration program, but we've also put technical information behind our concepts. And that's value. Getting data, historical data, contextualizing it, and putting it in a format that can be digested for a potential partner is extremely important. So we digitize historical data, we verify historical data, we do all of that and stress test it against our concepts. And at this point, we have a product that not only has a technical viability, but also has social and environmental and mineral licenses secured. And now we're testing the concept and we start looking for a partner at these points. So you see I've left the Kessia project in there. This is the stage at which our Kessia project entered into an agreement with Prospect Resources, who are, arguably one of the best battery mineral explorers in Africa at the moment. They discovered and developed the lithium mine in Zimbabwe, Arcadia lithium mine, which is in the top 10 size-wise in the world. And they then had an exit to a Chinese partner who they're now partners with. After that, once we've done that initial testing, that project then moves into what we call the pre-discovery stage. So what we've got to at this point is we have tested all our technical concepts. We have also verified a lot of the historical data, and it allows us to now draft a technical document that is akin to 43101 or JORC standard, that is now optimized for a potential public transaction. So at this point, we have sound technical data, a sound technical program, we have drill-ready targets, and we optimize for the partner to come on, drill it out, as we did with our Midex transaction with Crescent Lake, our Ontario lithium project. So what we are managing is we do not want all our licenses to sit in this pre-discovery column over here. We need to make sure that we have 2 to 3 projects in every column and that we move them along. If in our exploration phase, projects don't stack up, we don't need to then move it forward and spend more money on it. So again, we're protecting that equity, that hard dollar raise. The money is protected and being spent on projects that have a chance of moving forward. So we're busy building this pipeline slowly, and we're actively working on moving projects out of this pre-discovery stage. And we've got a few that have gone into this model, and this is a model in action. Again, we had the Kessia Resources, Kessia Rare Earth option that was signed in 2023. Antler maintains a 2% NSR in there and a 49% interest, plus cash payments and exploration expenditure. We have been able to take a lot of those cash payments and generate that we received from Kessia and generate more targets in Zambia and Namibia. Similarly to Crescent Lake lithium, we sold that last year to Midex Resources. And we got substantial cash payments, and we maintain a 6% equity stake in Midex. So that allows us as well to enjoy the long term that potentially will come from Midex's discoveries that they're going to do on our Crescent Lake deposit, as well as allow us to manage and liquidate when we see fit, or when we want to move forward on other projects. So again, we're getting short-term value from our cash payments and the expenditure and shares, and we're getting long-term exposure through our NSR and equity holdings on those projects. And I think for me, this is key. Oliver's sitting here with me. It's the team that's the difference. The question that we were asked at Mining Indaba this week was, you know, there's 1 million people who call them project generators and prospectors. Why are you different? The difference is the team. We've got a strong team that has experience not only in early stage exploration, but experience all the way through to mine closure. We've got a team that has grown up in Africa. We had home in Southern Africa. Oliver himself, he's a Namibian. Talene Kruger, our geo, is also a Namibian. I'm a Zimbabwean. You know, we're playing in our backyard, and we're dealing with, you know, our fellow countrymen, and it's a lot easier for us to move here. We're based in Namibia. It's cheap, it's quick, we're in the same timeline. That's augmented with the fact that we come from a pedigree of strong capital markets. Our 2 founders, Dan Whittaker and Wade Dar, are very accomplished entrepreneurs, both of them, and have had successful exits in companies that have been built for the last couple of years. And they continue to do that, and they continue to support us. And that's the important part. And you know, if I can come back to what I screened through everything. If I can come back to this part here, we not only have the ability to sell a project to a partner because of our pedigree. If we really like a project, it allows us to keep that project internally and move it on. And then we have multiple exits that we have the ability to have multiple exits, be it through a partner-funded exploration, be it through our own exploration success, or be it through spin-out or similar type deals. So that's the difference we feel, is not only do we have strong technical pedigree, we have strong capital markets pedigree, and that augmented together allows us to create value. And the key of what we're trying to do is shareholder value creation here. Ultimately, this costs money, and we have to do it. So our current cap table, as of the end of our financial quarter, September 2023, is displayed there. We did raise 500,000 bucks, 500,000 Canadian in November, so that cash has gone up a bit. We're sitting at the same market cap. We float between 4.5 to 5 million Canadian dollars in market cap. But I think the key thing here, and even after the last financing, our insider ownership is extremely strong. And that's motivated by the fact that we're building long-term value here. We're not building short-term value. So thank you for spending your time. I'm going to open up the floor for some Q&A. Any technical questions will be answered by Oliver. And anything else on the side will be answered by myself. Let me just... I need to stop sharing. There you go. So one question here is, when can we expect to hear feedback from our Paresis project?
So Talita and I are going to Paresis to do our first stage of mapping next week. So we'll spend about a week in the field covering the first 3 forms of the 5 forms we want to do the mapping on. And as I said, our first stage will just be doing some mapping, seeking the lay of the land, and take some grab samples. And then we'll send some of those samples in for assaying, but it'll probably be about a month or 2 of field work of mapping the entire area and really doing the full investigation. And then about a month in the lab to get the assay results, and that will then determine what our next step of exploration is, be it soil sampling or geophysics. So yeah, within the next 2 or 3 months, we should have hopefully our initial feedback from the first stage of our Paresis exploration.
And then the next question here is there an update regarding the Onkoshi license, and when will work start on the Onkoshi license? As I said, you know, our main focus as Antler Gold is to create a product that is valuable, and for that we need not only the technical viability, which the Onkoshi license definitely has. We also have to have the mineral license, which we have got secured, and we have to have the social and environmental licenses in place. Those applications and engagements are continually ongoing, and we're working not only with the landowners, but also the governmental stakeholders to move those along. Unfortunately, these things do take time to work through in a proper manner, so we're just working along as we can. One more question here regarding mining in Indaba. Mining in Indaba was fantastic for us. We had a lot of good engagements on both sides of the pipeline for us. So people who have early stage projects that think we might be interested, as well as the latter stage, which would do purchasing of our projects and everything. And our company needs to spend a certain amount of money on marketing, not to market our story per se, but also to market our projects and build a foundation for us to sell those projects on. So we continue to engage with those guys, and it's really exciting. There's definitely a feeling of excitement and a feeling of that Africa is going to play a massive role in the energy transition sector, and it's really underexplored. A follow-on question to that, will you be attending PDAC? Yes, we will be attending PDAC. We have set up various meetings with along Bay Street there and other stakeholders. And if you would like to meet, please feel free to send us an email, and we should be able to get back to you with the time. So there's a question here. If we are looking to joint venture or option EPLs in Namibia, we're definitely always open. I do see that we have been sent an email to our info account. We'll be in touch, and we encourage anyone who does have projects, not only in Namibia or Zambia, but if they have projects throughout Southern Africa, our technical team and our capabilities here with our system, we should be able to quickly work through that and give you an answer if we would like to move forward as partners. Thanks. If there's no more questions, I think that was a fantastic webinar. Ollie, thanks for joining me.
Thanks, Sam.
And yeah, we look forward to keeping you up to date, and we'll have news releases coming out periodically about the company's activity. Enjoy the rest of your day. Thank you very much.